Hi there, in today's video we are going to study IAS 38 Intangible Asset. Definition of IAS 38: an intangible asset is an identifiable non-monetary asset without physical substance that is held for use in the production or supply of goods or services for rentals to other or for administrative purposes, and from which future economic benefit are expected to follow to the entity. So intangible asset is an identifiable asset. First, it should be identifiable non-monetary asset without physical substance that is held for use in the production or supply of goods or services. For example, patent, copyright, license, movie right, etc. So patent, copyright, license, movies right, we can use it for our own purposes, production or supply of goods or services purposes. Rental to other, we can also rent it to someone else, or for administrative purposes we can also use it, and from which future economic benefit are expected to follow to the entity. For example, we give license to someone else, then we receive consideration. And also for movie right, when we give movie right to someone else, we receive consideration. So here that consideration consider under future economic benefit. Intangible asset must be identifiable. An intangible asset must be identifiable in order to distinguish from goodwill. So the main important point is generally internally generated goodwill, we do not recognize it. We only recognize purchase goodwill. So how we recognize purchase goodwill? So for example, when we are going to acquire any subsidiary, at that time we paid the consideration. So the formula is consideration paid plus NCI value less fair value of net identifiable asset of the subsidiary. The remaining amount will be that goodwill value. So here that goodwill value consider under purchase goodwill, and that we need to recognize it. Okay. So here the same thing is saying that if an intangible asset is acquired separately through purchase, there may be a transfer or legal right that would help to make an asset identifiable. So and now the point is, an intangible asset must be identifiable in order to distinguish from goodwill. With non-physical item, there may be a problem with identifiability. Generally, with non-physical item, we have problem with identifiability, how we can identify that. So that is the thing. Impairment. Intangible asset including goodwill acquired in a business combination are tested for impairment whenever there is an indication of impairment. For example, at the time of acquisition, we assume that that value at the time of acquisition we got the goodwill value. Okay, but now we assume that goodwill value has decreased because whatever reason. So now there is an indication for us. So we need to reduce the goodwill value. So that is called as whenever we have indication, we need to do the impairment. If the recoverable amount higher of fair value, what is recoverable amount? Higher of fair value, less cost to sell and value in use. Whatever will be higher, fair value, less cost to sell and value in use. That value will called as recoverable amount of the asset is lower than its carrying value. If recoverable amount of the asset is lower than its carrying value, an impairment is recognized. If recoverable amount of the asset is more than its carrying value, then there is no impairment. Recognition: asset is controlled by the entity. Future economic benefit attributed to the asset are probable. The cost of asset can measure reliably. So this is the recognition method. This is the recognition criteria. So asset is controlled by the entity. That is obvious. We need to control that asset, then we can recognize it. And future economic benefit attributed to the asset are probable. So from that asset, we can assume future economic benefit to the entity. And the cost of the asset can measure reliably, and the cost of that asset can measure reliably. Measurement: at initial, that asset will be measured at cost, but for the subsequent we have two model revaluation. First is cost model and second is revaluation model. For the revaluation model, there should be an active market. If there is no active market, that we cannot do revaluation model. We need to select only cost model. So under cost model, cost less accumulated amortization less impairment. Revaluation model only when active market, fair value less accumulated amortization less impairment. Revaluation gain or loss are accounted in the same way as we study in that IAS 16. So here now any subsequent expenditure on intangible asset default will be expensed. Okay, so any subsequent expenditure we made on intangible asset default, it will goes as default, it will categorize under expense. Subsequent expenditure on brand, masthead, publishing title, customer list, internal or external, always expense. Internally generated intangible asset, do not recognize it. Internally generated intangible asset unless strict criteria is met. We generally do not recognize it internally generated intangible asset, but we can recognize it when certain criteria is met. It's not certain, but it's a strict criteria. Research and development. Research discovering new knowledge. So whenever we have research cost, we need to expense it, because research we cannot capitalize it. Why we cannot capitalize it? Because at the time of research we do not have any surety that asset will flow future economic benefit to the entity. For that reason we expense that cost. Development, application of new knowledge. Criteria met, capitalize, amortize when asset is available for use. So if development under development phase, we can capitalize it if the criteria is met. Criteria is met, capitalize it, amortize when asset is available for use. So when asset will available for use, at that from that time we need to start amortizing. If criteria is met, then we need to capitalize it that time. So criteria is probable future economic benefit, first one, and intention to use or complete it, second one, and resource to complete it, third one, ability to complete, fourth one, technical feasibility, fifth one, estimate of cost are reliable, sixth one. So all these criteria we can memorize it in the short form, that is pilot. So probable future economic benefit, we must have probable future economic benefit. Second is intention to use or complete it, we must have our intention to use it or complete it. Resource to complete it, we must have that much resource to complete that project. Okay, ability to complete it, we must have ability. For example, we have resource, we do not have ability, we cannot the criteria is not met. All criteria should be met. And technical feasibility, we must have technical feasibility. For example, we have future economic benefit, intention to use it or complete it, resource to complete it, and ability to complete it, but technically is not feasible. For example, there is any kind of law or any kind of restriction that is a technical restriction, we cannot complete it. So that will not be if it is there, then the criteria is not met. It should be technically feasible, that we can complete it by technically. And estimates of cost are reliable. So cost can so the cost of that entire project or asset, we can estimate it. So when it is done, then we can capitalize it, that development. And when asset is available for use, from that time we can amortize it, that asset. If criteria is not met, then it will be expense. Now disclosure, the amortization method used. First, we need to disclose it that. Second, for intangible asset access having indefinite useful life. The reason supporting that assessment. Whatever intangible asset we have having indefinite useful life. So any asset we have that having indefinite useful life, for the reason why we are considering that asset under indefinite useful life, we need to disclose it. The third one is the date of any revaluation, if applicable, as well as method and assumption used. Any revaluation we made it, and if applicable, as well as the method we assume, and as well as method and assumption we use it for that revaluation. Now the fourth and last one is reconciliation of the carrying amount of intangible asset at the beginning and end of the reporting period. So we also need to reconcile that beginning and reporting period balance, and we need to disclose it. Thank you for this video. In next video, we will study different topic.